Hello traders, this is Marek from Trading Academy. In this video, we will continue with the price action pyramid level 3, the structure. It's a very important lesson, so if you want to enhance your reading of the markets and rise your profitability, stay here. Let's start with the structure. Because the structure itself, from my perception and understanding of the markets, is very complex. I would like to start with the basic stuff, and it is support and resistance. But in this lesson, we will look at this topic with more professional approach, which is actually working. So in this lesson, we will learn support and resistance like a professionals, like a pros. From my perceptions, structure gives us a matrix how price has been built at certain asset, and because of that we can determine important levels, spot which players could be involved, recognize strong and weak barriers, give us ideas about the liquidity, and get an idea of the potential of the trade. I would not waste time about some theories. Let's go directly to the chart. I selected daily time frame, and as you can see, I'm working with two levels. I'm working with this resistance, and below here it's support. I use this market for a reason, and it is that we have different kind of let's say behavior of the market at these certain levels. At the resistance you can see that market react on that, but the level is much more wider, and the reason is that the market is not so much balanced at these levels, and market participants see this level a little bit differently. So the order flow and orders on that type of levels are a little bit different. If you look at the support here, you can see that level below is much more precise, and market reacted much more precisely on that. And the reason is that again, it is about the behavior of the participants of the market. Who are these participants? It really depends on the time frame, because now we are working with daily time frame. This type of time frame are used by position traders or swing traders, but daily and weekly it's more about positions. And this type of participants usually have bigger orders, and they have much more dominant order flow than, let's say, smaller participants of the market. Generally, on the market, if you are working with higher time frames, support and resistance levels, its structure is much more wider. If you are working with let's say minute time frames, support and resistance, you can use smaller stop loss in regards of pips. This is really important information, because now we have, let's say, metrics, how we can perceive the markets and what risk reward ratio we are working with. For example, if we were, let's say, trading this consolidation from these levels, we would like to, let's say, short it below here to the center, and from below we would like to long it. It means that we need to use, let's say, stop losses above this level here. But if we would go to lower time frame, H4, we use smaller stop losses, probably like here or here. It's very important to understand that. Usually bigger players or position traders do not take into the account swings from lower time frames. They are just trading the higher time frames. And it is very important information for you, because now you know the market participants involved. If you are trading, for example, H4 time frame, you need to take care also about the traders from higher time frame. So if you know the market participants, you also know how probably they will hold the trade, and what would be their logic entries and exits. So small traders needs to be much more precise. I mean small traders, the traders from lower time frames, and traders from higher time frames, they use much bigger stop losses, or not much, but bigger stop losses in general. And because of that, you can imagine the participants who are behind the moves. The wider structure means that there are much bigger variety of orders than if you are working with thick structure of the level. In this resistance, probably the orders can be here, 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 but somebody could put the order there, but he was not in the end paired. But if we are working with support, you can see that the key entries were here, and it's very thick and not so wide in terms of the field, not like here. It's much more wider. So from the perspective of order flow, it means that the structure above is not so precise, and you need to work with a little bit bigger risk reward ratio or use different type of tactics of entries. One of my tips I would like to give to you is that I am timing trade from bigger structure from lower time frame to increase my risk reward ratio triple times and more. One of the questions I would ask myself is why is such difference between the, let's say, zones and variety of the orders? Because the institutional traders or bigger traders use also different type of strategies. They have different type of reading the markets, and in the trading it's not common that the traders will have the same technical reading of the market, and also there can be manipulation, stop loss hunting, and these are the reason why the markets are complex and the levels as itself are wider. They are not one single line with one pip. So this is why. Finally, I would like to go to this market situation and talk what would we trade. I changed the time frame to weekly to see the bigger picture, because now we see that the market is generally in downtrend. If we would like to open the trade on H4 time frame, I would stick with short as possible. We have this daily resistance. We can go to H4, and from H4 we can use our horizon pattern we share with you. Definitely check it. This is our level we would like to open the short position, and we would like to aim to the support below, to daily support, or at least to this level. This is all for this video today. So thank you for watching. This video was more about theories, not much fast graph, let's say, but this is very necessary, and also structure. It's more static way of understanding that. So there was not so much movement in the end. I am sure that this lesson helped you with reading of the market. Now you have more knowledge about the order flow in the support and resistance, that they are not like just let's say lines, but there is some orders behind that, and it means that there will be also some kind of movement because of that. Thank you for watching. Definitely don't forget to subscribe us on YouTube, also follow us on Facebook and Instagram to see more valuable stuff we are giving to you for free, and you can learn how we trade. Meanwhile, take the best trades.